Hi, I'm Joanne Fries, CEO of Candente Copper Corp. We have a large copper project in Northern Peru. We're listed on the Toronto Stock Exchange and also the BVL, which is the Lima Stock Exchange.
Joanne, hello. How are you? And welcome to London.
Well, thank you very much.
You've been attending the one-to-one conference, have you?
Yes.
How was that?
It was excellent. They organized it very well. And the booths were great that you could sit at your own space and you'd have all your meetings, but also other people would come and find you. So
yeah, just like walking by sort of opportunistically. Yeah, it's actually quite a nice one. And what sort of investors were you seeing? Sort of institutional or family offices?
Both, yeah,
right.
and some mining companies, but mostly, yeah, institutional and some people that are doing offtake, getting into debt, that sort of thing, yeah, as well.
Right. Well, that might be an interesting part of the conversation we're about to have in a second. Copper, clearly very topical, thematic, pretty well understood, marching into infrastructure rebuilds and EV thematics. So you're obviously very popular. What were the kind of questions that people are asking of you at the conference in terms of these investors? What do they need to say?
I think the biggest one is timeline to production.
Right. Okay.
And then just what are the next steps? Right. And yeah, why are we so undervalued?
Well, isn't it? Well, it's funny, isn't it? The market's quite a strange place at the moment. I mean, copper price was at 430-ish today. Great. Been a great run for 18 months. Equities, not so much. What's going on?
Well, first of all, the world's turning upside down right now. Nobody knows where to think the next place to make money is. Although I heard on Bloomberg Radio last week, just before I flew over here, I read a phrase I really like. Basically, right now in the current markets, there's nowhere to hide unless you're in commodities.
Yeah.
Which, in other times when tech's falling out of the sky and lots of things that are based on a lot of concepts or ideas or, we still have the copper in the ground. Gold mines still have the gold in the ground. So, it'll change what's certain aspects of that, but the basic core of what our companies are based on is still there.
That's a great line, isn't it? Because it's kind of like getting back to fundamentals, getting back to basics in a way. And I think obviously metals markets hopefully can deliver into that. And maybe we're in a sort of temporary dip at the moment. So look, I want to talk about your project. It's a big project. So why don't you remind people of some of the numbers out of the PEA?
Sure. So the resource, now on the Cañariaco Project, which is in Lambayeque of Northern Peru, we have 3 porphyry targets. One, Cañariaco Norte, we've done most of our work. It's all drilled off, and we've just finished an updated PEA, new PEA. Cañariaco Sur has 15 holes. It also has a resource. Quebrada Verde, no drill holes yet, but from surface looks the same. So if you add Cañariaco Norte and Cañariaco Sur together, we've got 14 billion pounds of copper, 4 million ounces gold, 92 million ounces silver, and some moly. Our earlier work from 2011 to 2014, where we were in pre-feasibility, we moved into feasibility, did about half of it and then shut things down because nobody cared by 2014 what was going on in the market and equities. In any event, at that time we looked at 95,000 ton per day throughput, added a roaster for arsenic because we had a little bit of arsenic and roaster cleans it up. And just a standard, I'm going to say, typical mine plan and infrastructure. Over time, what we realized is that we probably shouldn't need the roaster because our arsenic was estimated at 1 to 1.5% instead of the 4% that Codelco built the roaster for.
Right.
I just wanted to see if we could improve the project, have a lower capex, because Peruvian pension funds can potentially do half of a $1 billion capex. So that was our goal, was to get a capex of $1 billion. We managed to do that. I also wanted to not use wet tailings.
Right.
And it is more expensive to use dry stack. But again, Osenko's work, we managed to get rid of what would have been a much larger area of influence, because wet tailings separate from your waste. Now it's going to be co-placed, commingled, and dry tailings and waste. So ESG-wise, a much better footprint and just operation, and less cost because you don't need the roaster, less permitting, cleaner, and then this lower capex. Now that doesn't mean the bigger companies wouldn't still or couldn't build this at 95 and even 110,000 tons per day, which, okay, then the capex is going to be $2 billion, maybe a little more. But I don't have the studies to show that. I'm just estimating based on what we did before. So our new PEA, $1 billion capex using $3.50 copper as the base cost. Then we also have an NPV of $1 billion. That's after tax, because pre-tax it's 2.
Sure.
But then at $4.50 copper, it goes up to 1.8. So price of copper means a lot to changing the economics. Yeah.
So the scale is very attractive to majors with the balance sheets and access to cheap capital. For you, what I want to understand is clearly difficult markets for everyone at the moment across the board, not just mining, like across the board. It's tricky, right? It may be temporary, may take the rest of the issue to get out of it. Who knows, right? Lots of opinion on that. How do you navigate the choppy season? Because you've kind of got the Peru discount. I suspect people are a little bit nervous at what they're seeing from the government there. You've kind of got these small market cap companies, 45, 50 million market cap with a 1 billion capex requirement. And obviously, just generally, people aren't giving value to the kind of copper companies that we seem so desperate to find. So how do you look forward and how do you deal with that? First of all, let's start with Peru. What's going on?
They've got a leader that isn't educated enough or trained enough, capacitated enough to be running a country. But he also didn't do a lot of stupid things that people were, harsh things that people thought he might do.
Yeah.
So he is in a political party that talked about nationalizing the mines. He never necessarily said that. And when he got into power, he quickly realized that, as Humala did 10, 12 years ago, that mining is the engine of growth in the country. Yeah. And without it, you're not going to have a tax base. So he brought in a lot of experts, people that know what they're doing. Julio Velarde running the National Bank, Pedro Franque running economics minister, economy and finance, and listen to them. Right. So then he realized, oh, wait a minute here. Right. And what people started showing is how much the tax base has increased with the price of copper and the price of gold, the price of metals. So he's learned his lesson on that. And he hasn't, been doing anything. Nothing's changed in the mining laws. Right. In the taxes to be paid, it's 30% base tax and a profit-based royalty. Hence, as I said, our NPV at 350 goes from 2 billion before tax and 1 billion after. So those taxes are pretty hefty. And by the way, 50% of those taxes goes back to the region. Yeah. And we're the only big project in Lambayeque. Okay. So all the other ones near us are in Cajamarca. But you were asking what Castillo's done. He's basically trying to tread water and stay in power, but it's not gonna last that long. So
should investors be nervous about investing into Peru? Has it stopped? And I guess the second part of that question is, has it stopped foreign direct investment?
I was just going to say, Newmont is just got the green light on mining, on advancing, building their operation that's underneath Yanacocha. So Yanacocha, open pit mine, 50 million ounces of gold, world's largest open pit gold mine, I think. Yeah. Underneath that are sulfides, right. So copper. And they've just got the green light to go ahead with that. And I'm sure it's 500 million at least. So right. If Newmont's going to invest big money in Peru, they've got the confidence. And they've been there since the 80s. Right. So it's second largest copper producer in the world. And that's not going to stop.
It's kind of interesting, isn't it? Because Newmont have been in South America more broadly for decades as well. And as a company, I quite often hear from CEOs, well, it's business as usual, right? I know there's a lot of narrative out there, but it's business as usual. Whereas kind of, whether it be retail, family office, high net worth, looking in and getting a little bit nervous around the politics, the decision making is a little bit more cautious. So I guess say the question again is do you think they should be, or should they follow the lead of what these majors are doing in country? I think they should follow the lead of the majors. I mean, look how many years they've been doing what they're doing and making excellent money for their shareholders. Yeah. I guess it's risk off broadly at the moment anyway. So it's harder environment to make those sorts of decisions, you know, in terms of contrarian investing. The rules don't apply anymore. Okay, so that's what's happening in Peru with the leadership there. The next part of the question was the big one, which I'm sure you've been asked a lot about the last 2 days, which is, how does this thing get financed? Because you're probably not going to be the group that gets the production. So in a very meaningful way, does it matter?
No. When we start a junior company to make discoveries and de-risk them, and then either sell them to others that they can build, or we can build them if it's the kind of CapEx or the kind of structure we can figure out. So the reason we wanted to redo the PEA with improved ESGs aspects, and also a lower CapEx, is because Peruvian pension funds can probably do about $500 million CapEx, and that would be through debt and equity. They were a big part of Mina Justa, which is the copper project that Chariot had, that Minsor ended up building. And we've already spoken to them. Andres Mia on our board is a Peruvian financial guy, and he's got all the contacts. So they're not ready to finance now when we're not finished feasibility. Everybody needs feasibility before you're doing your debt. But they figure they would be, if, you know, we're launching into feasibility very soon. So by the time we're completed it, then they figure they'd be ready. Right.
So I guess what I'm trying to get at is trying to say, uncouple some of these thought processes that maybe retail are having looking in at this. It's like, you don't need to finance it. What you need to do is paint a picture or present the data for someone else with, you know, bigger balance sheet and bigger access to capital. Say, this is a nice sized project for us. So your market cap is irrelevant in terms of the decision making for
at
retail.
The moment.
At the moment. Well, yeah, it is at the moment. So how do you drive that share price? How do you get, you know, your, I guess, predominant, and you've got some big players in there, so Fortescue, but the retail guys that drive the liquidity and that volatility, and that's what's going to move the share price. So how do you get that message over to them, saying, like, this is...
Keep de-risking this and get attention from the bigger boys and get institutional shareholders.
Right. Okay.
And make sure everybody understands that. I mean, we had a 250 million market cap in 2011, 2012.
Yeah.
Thought we were on the way to selling it at 400 to 600 million, like all my buddies did on their projects. But the market crashed. You know, our permits took longer than we expected, or they should have. And but that was a different market. And so we're expecting that kind of market to come back for juniors and discoveries and such. But also just if you get competition going from more than one group wants your project,
there you go.
And you don't have to, you know, you don't have to sell it at any particular premium. You get it. And
So I'll ask the question of you, which I asked of a few people. Another large copper project up in Canada. Same situation. They've got a major in there, 19.9%. Is it off-putting in terms of getting this competitive tension going? Is it off-putting, or is that's just because they've got an option to, you know, either follow the money?
No, they don't have an option.
They don't. Okay, good news.
They have the right to participate in any equity financing to remain at 19.9%, which means they would do it on the same terms as the others that are involved. They did have a right of first refusal on debt, royalty, or streaming, but that's expired now.
Okay. When did that expire?
Last weekend.
Hot off the press, folks. That's good. But that's, like you say, it's a really important part of this thing is to engineer this competitive tension. It's not just about getting institutions on board. It's about getting industry partners and potential partners to come and say, that's a whole bunch of copper and gold and moly that we can get out of the ground. So how do you do that?
Well, we're in discussions. We actually announced a financing with Lind Fund out of New York, and they're already shareholders.
They were one of two term sheets you've got, is that right?
We have more than two.
Okay.
But I can't give any details.
Okay.
So Lind offered us money. They've actually been offering us money since 2017. Their formula is the kind of formula you do when you are pretty sure what you are doing or the world is doing is going to give you a rising share price. Yeah. So if we'd financed with them on this convertible equity last summer when we actually did a plain vanilla financing at 12.5 cents, when we did it half with Fortescue, half with Lind, if we'd done the Lind convertible equity formula then, they would have been converting at 20 cents.
Yeah.
Because they don't convert anything you get the money.
Yeah.
Nothing converts for 4 months because it's a 4-month hold.
Yeah.
And then they convert 1/20th of the amount they gave you over each month.
Okay.
Over a 2-year period.
Yeah.
So you were going, the reason we didn't finance with them in 2017, 18, 19 is because we didn't know where the world was going. We were in a holding pattern. But now, we did the desktop studies. We did the PEA. We're launching into feasibility. We're de-risking in a booming copper market.
Yeah.
And so it's a great kind of financing to do in that situation.
Right.
So we've announced that. And then because we announced that financing, and we were talking to other groups already, but just kind of, then somebody else, offered us. And so then we formed a special committee and hired advisors, and other people are making offers. So because we're going from a PEA into feasibility, which is a jump to some people, but we already did much of a pre-fees and a lot of a fees.
Right.
So we've got a lot of, the MET testing we'll do now is fees level.
Okay.
And a lot of what we'll do now is fees level. Some of what we'll have to do will be pre-fees level, but it'll merge into a feasibility.
That's interesting.
And it's only going to take about 8 months.
Okay.
So that really de-risks things. And that means there will be added value. And then we can start talking debt or offtake or all those things.
Right. So I guess there's a kind of quiet confidence in this, because you've done a sort of bridging loan recently for $1 million from a high net worth. Don't need to know who that is. On, was it 10% terms for 12 months, right? Is it 12 months? Okay. So that suggests to me, one, because it's not such a big amount, that you've got confidence about the timing of whatever this committee needs to decide. That it's going to happen relatively quickly.
Yeah.
Okay. Good. And so how are you for cash more broadly? Because that's $1 million.
Well, we're fine, but I really want to get aggressive and get the MET testing going and all feasibility and everything. So MET testing is the next key aspect of feasibility that we want to get done. Because once we've done that level, then we can be starting discussing offtake and,
Right. So I just want to understand the strategy, what's going on up here. You know what you're doing. So those conversations are happening. But once you've sort of agreed what path you're going to go down, would that mean that you possibly come back to market for a little bit more to kind of carry you through until the end of that funding or whatever structure it is that you come up with partners?
No, I expect the financing we do out of this strategic interest to be sending us on our way and bringing in that other shareholder we wanted that kind of balances out Fortescue.
Okay.
Yeah.
How did Fortescue feel about that?
Oh, they're mostly just wanting to make sure whoever we're bringing in are good shareholders.
Okay. Meaning they would prefer you to have a strategic partner or a institutional partner or because it's got to work for them, right? Because they obviously we saw what sort of happened in the nickel space with them. So it's kind of that created competitive tension.
We don't sit around the table with them and ask them where they'd like us to get our money.
Okay, it's not like kind of.
But we do have discussions once we've announced things, like we got feedback on the Lind group and such.
Yeah.
So they certainly have some opinions, and we do have some discussions. Mm-hmm. But as I say, they have a right to participate on any equity, anything now. They have a right to participate at the same terms and stay at 19.9%. Okay. That's what their right is.
Okay.
Yeah. And they have a person on the board.
Yes. What was her background? So I can't remember.
Just long-term with Fortescue.
Okay.
Yeah. She's sort of a country manager or logistic. I don't know. Yeah. She does a lot of social stuff, but also just...
Which is not to be not these days, because crikey, such a big deal. Especially with the funding component. I mean, because we've got polarizing views when we speak to people about that side of things.
The social side.
Yeah.
There's no country that you're not going to worry about social aspect. I was talking to somebody from Norway yesterday.
Yeah.
And it was an interesting discussion because my dad was actually instrumental in, he negotiated the first oil deal with the Norwegian government in 1976. Okay. Brought Amoco in, and he was president of Amoco Norway for about 6 years, living in Stavanger. And so Norwegians are used to making great money off the coast, but they don't see any of that. Now they want to be developing some base metal mines, and people are like, no, not my backyard. And so, you think it's not just where there's poor people that don't want mines in their backyard. It's across the world. And I actually, one of my comments in some of my explanation of where we are with the copper world is COVID. Mm-hmm. COVID made people realize everybody has a right to see a doctor, get that vaccine if they want it, an education, which means they all need internet. They all need electricity. Right. But it really showed the social inequality, because some people had to go out of their homes to get food. They had to work outside and expose themselves. So I think it's kind of a new world of people caring about each other.
Well,
to some degree.
So. I do hope so.
Yeah.
Because if you want a greener world, copper is a big part of that. Like I say, we don't all understand the thesis of it, but the not in my backyard mentality perhaps makes things a little bit difficult. So we talked a lot about, used to be First Nations, and then it became a sudden realization NGOs have a part to play in this, and then there's kind of social license more locally or even regionally in some cases. It can stop projects in their tracks. So, I mean, you talked about some of your programs in your PowerPoint, I noticed. I mean, what sort of things are you delivering locally?
Well, it's an agricultural economy.
Yeah.
48 caseríos, like little hamlets, so groups of houses.
Yeah.
There's the upper part, middle part, and lower part. The lower part is very rich soils, lots of coffee, lots of fruit. Middle part, some of that, and some more subsistence farming. Upper part, pretty much subsistence farming. So right. We've actually had a program to help them grow quinoa, and they were growing a lot of potatoes. We also had a program to help dry mushrooms, which has become very famous, right. Hongos de Marihuana, and they're sold. They're specialty, right. So they're sold in a lot of places. And they just needed ovens to dry them. Yes. Right. Yeah, they're just for food, nutrition.
But the dry
nutrition. Okay. Yeah. But you have to find what people want to do. When we first suggested quinoa, the people weren't used to it, and they actually. We had a very interesting meeting with I can't remember if it was probably around 20 people in a room, big table, and they said, we don't want to grow quinoa. I said, hey,
don't grow quinoa.
You do whatever you want. Yeah. I'm just helping, trying to introduce. Your soils can't grow coffee, and quinoa sells for more per pound in New York than coffee does.
Light bulb.
So, maybe you'd like to try it, but then we had an agriculturist to help them. And in the end, the quinoa did take off in some places and others no. Okay. But doesn't matter. You're just trying to help them have a better life through the farming they want to do.
Right.
And have the space to do it.
But like you say, you can't just walk in and say, you must do this, or you should do this. You've got to work collaboratively. Right?
We have a commitment on our agreement for surface rights from before, and that we'll duplicate and make some modifications. But it was 1.5 million soles over 3 years. And the people that decide where that money goes, it's a committee. Okay. Committee of Administration. 3 people from the community, so 1 from the high part, the middle part, right. And the low part. Yeah. 2 people from our company, and then it was somebody from a university. Now it's the Cámara de Comercio, the Chamber of Commerce, right. In Chiclayo, that can help them meet more people with businesses. But it's sustainable development projects or shared value projects. So, right. But it can be education, it can be moving towards electrification, it can be whatever they need. And this team committee decides.
So is your message to shareholders, anyone looking in at projects like this, more broadly, wherever they want to invest their money, is like, if you don't do stuff like that, your project is likely to, or more likely to, fall over locally or be blocked locally? Or do you think, actually, we could probably just keep ourselves to ourselves, it'll run the same way?
Oh no, you have to be doing that. Right. And you have to be very careful that that your money is going into projects that benefit as many people as possible, and that's been the problem, is it's easier just to write a check to one person. Yeah. But that solves nothing. Well, that's very unethical, but you know, it's just people seem to think. Anyway, whatever. When that happens, it's
trickle-down economics doesn't work. Okay. Well, let's kind of get, for your shareholders, sort of look to the future, right? Is because, like I say, you're going through a kind of rapid delivery process over the next 8 months, right? Those conversations are happening. Which is what people want to hear. What would you point them at as moments for growth? Like I said, market's been hit. Market cap is what it is. Share price is where it is. What does that growth profile look like going forward, and what are the things that are going to drive that?
Well, we're launching into feasibility, and as I say, the first and most significant part of that is the MET testing, level MET testing, and that core is already drilled.
Yep.
So it's sitting at the lab.
Ready to
go.
Okay.
We just decide what we're doing on our financing, and we're funded for that testing. Get that in I think it's about 6 months to get that done. And then other aspects of feasibility, make sure we understand, especially the newer concept, commingling of tailings and waste, and a few other things. In any case, get that timeline going. And then we can also start our ESIA, which is environment and social impact, and that's detailed. And what that means is it's for an operation.
Right.
So we've done lots of ESIA that's for drilling permits, but we'll go forward, and that can only get started once your feasibility's gone far enough to know details, technical details.
Right.
And that you engage with SENACE, and they do it with us. So instead of being an environmental authority that just you spend a year or two doing all your studies, and then you hand them this,
submit your homework,
and they have to spend another year reading it. They do it with you. Now they will say, well, we want you to do this versus this, but you work with them. Now it's about a year and a half for that.
Okay.
But that includes the first 20 permits.
Out of how many?
Probably 100 or maybe a few more.
So the ball's rolling. It's collaborative. So everyone knows where they are at any one moment of that exercise. Because like when you say it's a year and a half, you may not want to be around in a year and a half.
Doesn't matter. The project.
That's fine. It's good.
Project.
I'm saying it started.
Yeah, exactly.
Yeah.
This is all attached to the project, not the company.
Any buyer coming in is going to say, I want to know that process has started. That's brilliant. Okay, fine.
Because that's part of your timeline to production.
Yeah,
right?
Exactly. Yeah. So what are the other kind of moments that we're looking forward to? If we maybe take the next sort of 6 months, 9 months, whatever you want to do, because these are kind of baby steps or little, what do you call them? Like step up moments in what you're trying to do to deliver this
deliverables
picture where someone goes, that's enough for me to work on. That's good enough for me to take it from here. Thank you very much. So what are the other things that you think you need to be responsible for in terms of the financing it and doing it?
Well, it'd be the new cost estimate, but the question is, when do you do that? Because things are pretty volatile right now. So
no one wants to do
I don't think we're in a big hurry to do that. We know it's a very economic project.
Yeah.
And but that will have to be done, obviously.
And you're, of course, referring to the fact that inflation driven by supply chain issues and rising costs across the board.
Right.
People aren't rushing into that. Do you think it's transitory? And there's a conversation for like 3-4 months ago. Is it transitory? Will costs come back to a more reasonable level? You think we are where we are?
Well, if they don't, copper's going a lot higher.
I guess net, it's all fine.
So.
Right. Answers that question. Okay, so Joanne, those are the moments people should be looking for, and people should judge you on?
So in addition to that, we are also applying for drilling permits at Cañariaco, Cerro, and Quebrada Verde, which would be more resource exploration. So it's a discovery and expansion of the resource at Cañariaco, Cerro.
Yeah. Would you package the Norte and Cerro together? Yes,
the plant will actually be now right beside Cerro.
Right.
And so we would mine Norte first.
Right.
But what it is the deposits here, crusher down here, and then and some trucking of waste to the new commingled facility. Okay. But it's going to be conveyed up to the plant that's right beside Cerro. Okay. And then everything would go over to the commingled. So Cerro has a lower grade of copper, but more gold and some moly, and much less, like virtually no arsenic. Yeah. So whether Norte with the PEA right now is standalone, the economics of it are all by itself, but using that layout. So but add Cerro into that, and you're either going to have a longer mine life, or you're going to change up some of your economics. Right, so whether you're gold equivalent or copper equivalent, that's being lumped in together. Would that be bought as like, sorry, is someone coming in and buying the company, or is it a project? whatever they want to do.
Okay, don't mind. Okay. I'm just thinking of all the other kind of exploration upsides, so no point. It's big enough.
Yeah, we at one point did a 0.5% NSR, and we wanted it to be restricted to Norte, but they insisted it be all together.
Right.
And to be honest, the economics of the project they're too close together to start separating them, and that's okay.
Land becomes a premium at that point, doesn't it?
Yeah.
Okay. Joanne, thank you very much for your time today. I really enjoyed that, learning your story, hearing how you are moving it forward. Stay in touch, let us know how you get on, okay?
Okay, sounds good.